It is 2 a.m. You are staring at a glowing screen, watching the numbers in your brokerage account bleed red. Your chest is tight. You did everything the financial gurus told you to do. You bought solid assets, you did your research, yet your net worth is evaporating right before your eyes. But step outside that panic for just a second. Somewhere else, inside quiet, glass-walled, institutional boardrooms, nobody is sweating. Nobody is losing sleep. In fact, they are buying exactly what you are panic selling. The math doesn't lie. While the middle class was liquidating portfolios in pure terror, the top 1% of Americans were quietly accumulating. By the end of 2024, the wealthiest 1% had absorbed 30.8% of all national wealth. That is an incomprehensible $49.2 trillion. While you are suffering a financial catastrophe, they are treating the collapse like a wholesale discount. They are not smarter than you, and they certainly are not luckier. They simply understand a ruthless cycle of wealth destruction that you are unknowingly participating in. The reality is more complicated. You have been conditioned to believe that market crashes are just unpredictable anomalies, random risks you simply have to stomach. But that is the fundamental lie of the financial system. This is the paradigm shift you must accept if you ever want to stop bleeding money. Wall Street is not operating on chaos. It operates on cyclical, perfectly legal wealth destruction. Financial institutions do not need to break the law to take your money. They simply weaponize the invisible chains of debt you willingly tied around your own neck. You see, the high-earning middle class constantly confuses owning an asset on paper with actually having control over it. You buy into the illusion, you use leverage, you take out loans, you stretch your cash flow to its absolute breaking point just to acquire more. But if a temporary market dip or a margin call forces you to sell your investments to survive, you never really owned them. You are merely holding them for the elite until they were ready to buy them back at a massive discount. You are their liquidity. And right now, the trap you are walking into is bigger than ever. The financial industry sold you a very specific, very toxic lie. They convinced you that leverage is how you catch up to the ultra wealthy. In early 2026, retail margin debt, the money everyday investors borrow against their own portfolios, hit a terrifying, record-breaking $1.28 trillion. You suffer from the Dunning-Kruger effect. It is a psychological blind spot where a little bit of knowledge gives you a massive, dangerous illusion of control. You think you can outsmart Wall Street algorithms just because you have a brokerage app and an approved line of credit. But borrowing money to buy assets doesn't accelerate your wealth. It builds a financial sinkhole right under your feet. Because when the market inevitably, violently corrects, your broker does not care about your long-term investment thesis. They issue a margin call, and if you do not have the liquid cash to cover it, they trigger a forced liquidation. Do the math. Let's say you are forced to liquidate a $10,000 position at the absolute bottom just to satisfy your margin requirements. You did not just lose 10 grand. If you had kept that $10,000 invested in a standard S&P 500 index fund, compounding at a historical 8% for the next 20 years, that single margin call just evaporated over $46,600 from your future retirement. That is not a market dip. That is pure wealth destruction. By using debt to buy assets you couldn't actually afford, you literally paid the system for the privilege of stripping away your own control. You handed them your wealth on a silver platter. Here's what nobody tells you about market crashes. The system does not just take your money. It weaponizes your own biology against you. When your portfolio plunges and the financial media screams about a recession, your brain enters what behavioral psychologists call the scarcity mindset. This immediately triggers the tunneling effect. Financial stress literally paralyzes your cognition. Your brain's bandwidth shrinks until all you can see is the immediate threat. It forces you to commit financial suicide simply to escape the agonizing, psychological pain of losing money right in front of you. So, you hit the sell button. You tell yourself you are just stopping the bleeding. You think you will just buy back in when things stabilize, right? Wrong. According to the 2024 Quantitative Analysis of Investor Behavior Report by Dalbar Incorporated, everyday retail investors routinely sacrifice 44% of their potential returns over a 30-year period. Why? Because of this exact panic selling cycle. Let's apply the micromath to a standard $100,000 portfolio. You panic and sell at the market bottom. By missing the inevitable recovery and destroying your compounding curve, you are not just locking in a temporary loss of a few $1,000s. By surrendering that 44% compounding edge over the next 3 decades, you just evaporated over $750,000 of future wealth. Let that sink in. $750,000 permanently gone. This is how the silent wealth transfer actually happens. The elite do not need to steal from you. They simply apply enough psychological pressure through engineered market volatility until you hand over your prime assets at a massive discount just so you can sleep at night. You think you are protecting yourself, but you are just feeding the machine. You cannot beat Wall Street algorithms with sheer willpower, and you certainly cannot predict the next market crash. So stop trying. The ultimate defense against this systemic wealth destruction is not a better trading strategy. It is the ruthless construction of a financial margin. Cash sitting in a bank account will not make you wealthy overnight. But cash buys something infinitely more valuable than a speculative return. It buys optionality. Cash is a fortress against forced liquidation. It gives you the optionality to sleep peacefully through a recession, to ignore the financial media, and to completely detach from the panic of the middle class. Watch how this plays out. Before you buy any asset, before you deploy a single dollar into the market, you must execute a 60-second risk protocol. You look at your balance sheet and ask yourself one brutal question. If this asset drops by 50% over the next 2 years, will I be forced to sell it to cover my mortgage, my SUV payment, or a margin call? If the answer is yes, you do not buy it. You must build a cash buffer so thick that a market collapse becomes a mere inconvenience, not a financial catastrophe. This is deliberate living. You remove the friction of panic by ensuring you are never forced to sell your assets when the elite are looking to buy them. Stop using leverage that breaches your psychological safety limit. Because in this system, whoever holds the cash buffer holds the ultimate control. Let's fast forward 15 years into the future, right into the middle of the next devastating economic recession. There will be 2 types of people watching the markets burn. The first group will be exactly where they are today, drowning in the invisible chains of debt, completely stripped of their optionality, and forced to liquidate everything they own just to survive. They will panic, sell at the absolute bottom, and hand over their assets to the institutions. They will be completely broken by the system. The second group will be watching the exact same financial news, but they will be sitting in absolute calm confidence. They will not be sweating over margin calls, car loans, or credit card minimums. They will be holding their cash buffers, quietly waiting to step into the wreckage and accumulate generational wealth at a fraction of the cost. True wealth is not measured by how much you can buy when the market is euphoric. It is measured by how much you can keep when the system collapses. One group looks healthy, the other group actually is wealthy. These are rarely the same people. The choice is yours.